Hi guys, good morning. Thank you for joining us for this panel discussion. We'll be talking about crypto-centric banking, which is a very hot topic these days for our industry. I'm joined by these great panelists who are all very experienced in this space, so it will be great to hear from them. So to kick it off, why don't we just do a quick round of introduction. Tell us about yourself and your bank.
Sure, I'm Erica Khalili. I'm the Chief Legal and Risk Officer at Lead Bank. Lead is a financial institution based predominantly out of Kansas City, Missouri, but with offices in New York and also in the Bay Area. It was acquired in August of 2022 by myself and my co-founders who had spent a lot of our formative years both on Wall Street or in the tech sector working in crypto or fintech. And we acquired the bank predominantly for the purpose of banking this industry and making, that bridge between the crypto sector and TradFi, which is a term I did learn at this conference, and TradFi a little bit more united.
My name is Michael Rose. I'm the CEO and founder of Metropolitan Capital. We are what would be referred to in Europe as a universal bank, so that's private banking, commercial banking, and investment banking, all delivered through a single platform. We focus upon small to medium-sized businesses and the founders and families that own or operate them. And we serve a diverse constituency, but we have a significant amount of activity in innovation, fintech, and a segment of that is within digital assets.
Great. My name is Miles Pacini. I'm the co-founder and CEO of FE Bank. FE Bank is a bank that was built from the ground up for this space. In fact, the name FV stands for FinTech Ventures, so we were envisioning from day one that we would build a bank that's vertically integrated to support fintech, which has led to be, fintech these days have a lot to do with blockchain or crypto, and so I make a joke that we could have called the bank BV Bank if we would have known what the future had for us. We're based in Puerto Rico, so we're a little bit unique. We provide depository and payment services, digital asset custody, and we're also a Visa and MasterCard issuer. So we kind of offer a full suite of services, and a large part of our client base is in this industry.
Nader Suri, I lead our digital and corporate banking team at BNY. BNY is a global systemically important financial institution. We're known as the world's largest custodian with over 50 trillion of assets under custody, but we also are a large payments bank, and we are also a large investment manager with over 2 trillion of assets under management. And we have certainly been leaning into the digital asset space. So look forward to the discussion.
Great, thank you guys. So since all of you guys are from traditional banking and now leaning into the crypto space, so you understand the both worlds, right? So in your view, what are some of the current challenges in the financial systems that can be addressed by crypto and digital assets?
Sure, I'll take this one to start us off. I think right now you see this dichotomy of crypto for the crypto world and crypto for the real world. And I think that that's a really interesting bridge that we're seeing how digital assets can create a global ecosystem and finance platform in a really safe, secure, and sound manner to allow use cases that either had incredibly high transaction costs or huge barriers to entry in terms of being able to have this global economy that we all need. And I think that that's where I really see a future in terms of the use cases. And the use cases that resonate are not only on the investment side, which I think a lot of folks in the audience and that we've chatted to at this conference are very deep in, but also the really human use cases and how you can unblock access to financial services for people that have been traditionally kept out of those on a global basis. And that's a lot of what, when we're talking to policymakers, the Lead team, we try to take it from the world which seems opaque and seems hard to understand and really humanize it and give those use cases like a gig worker in the US who's trying to send money back to El Salvador, and instead of using something with incredibly high transaction costs and very long delays can actually find a 24/7 secure way in an economically efficient way to send money. And I think that that's how crypto can be incredibly impactful across multiple domains.
Right. Yep.
So
Michael?
there are a number of inefficiencies within the traditional financial system. In the near term, as has been discussed, efficiencies in international payments, immediacy of payments. I think those are clearly things that where there's opportunity. I think longer term, certainly blockchain assets afford the opportunity for a more secure and efficient store of value and wealth. And over time, you would envision that through smart contracts and other efficiencies, that more wealth will gravitate to digital assets because it will just be the more efficient place to retain and grow them.
Definitely. Yep.
Yeah, I think there's like equal parts opportunity and equal parts problems that we're kind of dealing with. And we've taken the approach at FE Bank that if you think of a Venn diagram, you have digital assets and crypto, whatever you want to call them over here, and TradFi, I think we'll also use that word, traditional banking services. And where's that area in the middle that we can make a difference? And so we've done things like integrate stablecoins into our DDAs a couple of years ago, which is really was kind of, you talk about leaning in, like people are like, what are you doing? How can you receive a stablecoin into a DDA? And so what we're trying to do is find that alpha where we can take the best of what the blockchain has to offer, because we can argue that a stablecoin transfer is more efficient, more cost-effective, more secure than sending like a traditional wire today. So we're trying to find these opportunities where we can really make a difference, where integrating blockchain or crypto into traditional financial services makes a difference. So now, for example, our customer has a choice. Do you want to send a wire, an ACH, or do you want to send a stablecoin? And that gives the benefits of blockchain, but still inside the controls of a bank and all of the BSA, AML issues that we need to deal with.
Yeah, I think we kind of look at things from the perspective of like capital markets infrastructure, right? So if you're able to utilize, blockchain technology to enable the faster posting of collateral, for example, or if you're able to shorten settlement times, if you're able to, reduce costs because of those shortened settlement times, then that is obviously a positive. I mean, we kind of look at it as, digital assets and blockchain technology is really one part of a continuum of innovation in the financial services industry. I mean, that's probably a product of the fact that we've been around for 240 years, but it's an essential part of innovation in finance, and I think from a capital markets perspective, it has a real impact in the future of how people trade, settle, and send money, for sure.
For sure. Yeah, I definitely echo a lot of things that you guys mentioned, especially on the cross-border payment front. We talk to a lot of banks, and many of them are having issues using SWIFT, and that's the exact problem that we're trying to solve here at Ripple. So totally agree with you guys. And now, just this year, we've seen a lot of momentum despite challenging regulatory environment. There has been growth, right? From consumer side of things, now we have about 53 million crypto wallet holders here in the U.S. On the institutional side, they're leaning in by launching ETFs. Just everyone's curious what banks are seeing, what you're seeing from your customers. What kind of demand have you seen for crypto-related services?
So, I think from our perspective, we are banking the people that are banking those that are in the crypto space. And so the demand has been immense, to be honest. And I think for a long time, especially in TradFi, there was a hesitance to dip your toe into the digital asset sector because of the high costs of compliance and the perhaps question of, was this something that was going to stick? And I think the answer is pretty clear and evident that it absolutely is. And now I think it's more dangerous for the US and for banks to not be willing to invest in it in the right compliant manner. But the demand is absolutely there. And again, it goes from people that, companies that approach me that need a plain operating account to pay for DoorDash for employees, make payroll, et cetera, to Rails for on and off ramps, to more complex solutions. And that's where I think banks that can show up from like a product and compliance first perspective, the demand is absolutely there, and it's becoming more of a risk to not understand than to actually invest in it.
I'm happy. Yeah, I think it's one of those industries where we say that demand far outstrips supply. I mean, I think we're still there. There was a comment made backstage that there's maybe 10 banks in the United States that have, quote, leaned in. And I think that, I think that's actually kind of good in a way, because if new banks want to lean in, they need to be prepared to get into this space. I make an example. There's, banks, all banks have some risk category that they operate in. Maybe it's cannabis industry, maybe it's, gaming. There's all kinds of risk categories that a bank might operate in. If you're going to operate in this risk category, you should be prepared. And you should understand things like crypto deposits have more velocity than traditional deposits do, so you need to treat them differently. Compliance requirements, you can't get away with being like a community bank with 30-year-old, sanctioned screening systems. You need to invest in the systems in order to manage the velocity and to some extent the volume of the business. So I think the demand is certainly there. I know after the failure of we call it the triple S failures, that we had hundreds of businesses apply. And one of the things that we learned was that these were people who were actually coming from other institutions that got debanked for various reasons, like being shut down. But we found a lot of those were not potential customers for FV Bank. They were not prepared to be a customer. The actual industry was not prepared. So I would just say that demand certainly outstrips supply. And if you are a bank thinking about leaning in, you should invest time and energy in understanding the risk that you're taking on and then make the investments necessary.
Yeah, I would say, there are certainly a number of banks that are intent upon filling the vacancy that was created from the exit of those institutions, and we are not one of them. We have a handful of clients that are in the space that we are assisting in basic depository services and then a number of other projects. But our approach has been that, as Nader had said, there's been a digitization of financial transactions for the last 50 years, right? We all accept QSIP, which is a numerical representation of our physical securities assets. I don't think I've ever seen a stock certificate of a publicly held company that I own. And these things will continue, and we think this is part of that. And the way we see it, and maybe something that other smaller banks could look at, is that we see that these alpha clients that we have within these spaces are helping us to build out the infrastructure that we know will eventually be important first to our small and medium-sized business clients through API networks and larger compliance ability to create and administer accounts programmatically. These are all things that will, in the first instance, be of value to our small to medium-sized business clients, then the family office owners, higher net worths, et cetera. So, I think there is an opportunity to leg in a bit, as Miles rightly described. It is a higher level of compliance and administration that is required to do this responsibly. But I think, and the first question we get from the regulators is this going to be the primary source of business? And the answer is no, it is not. But it is something that we think is important for the future, and we want to continue to build our fluency and continue to identify our relevancy within the space as it grows.
Great. Yeah. And so Miles already touched on this a little bit. So last year, the banking crisis was obviously a big shock and had a big impact in our, on our industry. And what are some, lessons learned from that? And did that create additional opportunity for some of you or other banks?
I think a lot of the lessons learned, to be candid, had less to do with digital assets concentration and more to do with contagion and the volatility that Miles touched upon in this rate environment. And so understanding, a risk ranking of your crypto deposits and those that should be somewhat counted as ephemeral because they are fairly volatile in nature is a huge learning, but also it's a component of safe and sound banking that I think permeates any bank that's engaging in the space generally, but of course needs to take priority in this one. It definitely opened up opportunities in the sense that those triple S, is that what you called them? Triple S. The triple S situation definitely also changed the aperture of where folks wanted to bank. I think historically there was a notion that there were these larger players and everyone concentrated in them, and now the need for diversification and redundancy has become much more paramount, and I think I've responded to more RFPs as a bank than I probably ever did before, and I'm being asked questions about call reports and concentrations, which are the absolute and complete right questions that I should be asked. But I think it's definitely opened the aperture of banks that are ability to take a bite and just sound business continuity planning from folks that are in the digital asset space.
Yeah, I would say, keep an eye on uninsured deposits. We're fortunate there where ours are 15 to 18%, and some of those were upwards of 90 in that class. Certainly, we've begun to impose concentration limits as it relates to all sectors, not just digital asset. And then for ourselves, I suppose it was remember not to allow our bank shares to become publicly listed.
Just a comment on that. So I think what came about from last year was that resiliency is really key to clients, right? The resiliency of the bank that you're banking with. Can they withstand stresses of their own? Banks are still important, even in the digital asset crypto world, and that became very, very apparent very quickly. So I think it's also just, I think we're coming into a period of time where there is no longer this dichotomy between digital assets, crypto, traditional finance. I think there is a very real convergence. I mean, what we see is that there's a huge amount of demand, not only from digital asset natives, let's call them that, but also traditional institutional investment managers. I mean, we have supported 80% of the Bitcoin and ETH ETP issuances in the market, and we're continuing to see that convergence of players, where really digital assets is becoming just another asset class, but also a technology that, we'll talk about tokenization, I'm sure, but that enables real capital markets use cases.
Yeah, definitely. So this question is for you, Erica. So, these days it's very difficult for any crypto company to find a bank to bank them, right? So, and there's just so much regulatory pressure on banks who serve crypto companies, and it's almost like, if you advertise you serve crypto companies, you automatically have a bullseye on your back from the Fed. So how do you navigate through all of that, right? And you want to be in the space, you want to do the right things, you want to build out the right AML compliance systems, and how do you navigate that pressure?
We joked backstage which one of us was going to take the regulatory question, and I think I volunteered as tribute.
Thank you.
You're welcome. And it's interesting because it's that word regulatory has permeated this conference, and I think it shows up on every panel. And so I think for a long time there was an intent to live in the gray area, and that was fine, and it worked, and we were all kind of okay with it. And now the need for regulatory clarity and interagency collaboration amongst the banking regulators has become paramount, because there's a lot of banks that have interest. There are a lot of banks that want to do this the right way and want to meet their regulatory expectations. And I think that requires a great deal of investment. So one of the things, and the way we've approached it at LEAD, and I think that this has also been mentioned in many panels, is transparency. There's nothing that we're ever going to do in the digital asset space that our regulators will be surprised at during an audit or an exam cycle. We update them quarterly. And what we've really leaned into is probably 3 core domains in managing our regulatory relationships. And the first one is the education component of it, because I was at a recent event and they put up a poll of what people think when they hear the word crypto. And the top 3 words were risky, volatile, and criminal. None of which are backed by data, by the way, but that's the perception. And so when you're dealing with different audiences and different constituencies, you have to go into that where that perception has become a part of their reality and then dispel it. And so going through and having that educational layer about how this isn't some opaque, nuanced world that only a few live in, but it really has practical use cases and can impact the capital markets, it can impact commerce, it can impact lots of different things, is one core component. The second is the use of technology. And I think that just being realistic, like digital assets isn't going away. So at this point, being able to regulate it within the banking system in a framework that already exists accretes to everyone. It gives credibility to the sector, banks remain safe and sound, and the regulators get that direct oversight where we're not looking to like skirt regulation, we're embracing it. Like whenever we meet with the regulators, we're like, tell us what you would like here and we're happy to follow it. And that's where the technology and the sort of show don't tell comes up with the data aspect of it. Because we have the ability, at least in the systems we've built, to have that real-time monitoring, to be able to see things, and to be able to also say that although there's great concentration in the banks that will deal in the digital assets, that also can be accretive. Because we have a bird's eye view on the sector, and when we see a fraud ring or some other issue coming up with one of our clients, we can see that and bring that to others, which actually, you know, accretes to the end customer from a consumer protection point of view, which is absolutely something the regulators are hyper-focused on. And then the third, you know, aspect of dealing with it is just patience. To be totally honest, like it's not going to happen overnight that the regulators are going to get super comfortable and come in and say, yay, crypto. But it takes time, and it takes working with your regulators and building that trust over many, many exam cycles, and also knowing that, and it's incredibly frustrating, honestly, in my role, but the goalposts are going to move. Like that's just the reality of this, and we have to keep pace and try to be that thought partner on putting them in a place that actually is sensible, logical, and accretes to the end goals. But it has not been the easiest time to be in the sector from a regulatory perspective. I won't sit here and say that that's my favorite topic, but it's one that's really relevant, and I think it's also a great differentiator because, to echo what Miles said, when you see other banks that are entering into it and we want to dip our toe or we think this is a great way to get lower cost deposits, that's what keeps me up at night, to be totally honest with you, because this isn't something you dip your toe into. You need to be able to translate between TradFi and the digital asset sector, and you need to have people that understand both and can discuss that with the regulators to bring them along. And you also have to invest in it from a product perspective, from a tooling perspective, and from a headcount perspective. Otherwise, I think that's how some banks are getting the whole sector to be a bit more tainted.
Yeah, definitely agree. Education, absolutely, you know, critical, and technology, investment in technology, and then third, patience. On the patience side of things, we are seeing some light. So just, you know, congratulations to BNY Mellon, who recently just got that special approval from the SEC to custody digital assets. So Nader, would love to hear your thoughts, you know, on how that process went, and do you think this is actually, you know, the beginning of the SEC opening up and allowing more banks to custody crypto?
Yeah, so I couldn't agree more with Erica about like how you, if you're a bank and how you engage with regulators, it should really be one of like cooperation, co-innovation. Yeah. I think that's a big missing piece in this industry of actually like being very, very transparent and bringing regulators along for the ride. They can be helpful in this regard. And listen, we've been on a journey with digital assets. We were the first GSIFI that launched a digital asset custody offering in 2022, which was a very interesting time for all of us in the industry, as we all know. And listen, I think the approach to crypto custody, digital asset custody, has been one of being very methodical and prudent, and taking things on a use case by use case basis. This is a marathon. It's not a sprint, particularly when you're talking about reimagining the way traditional finance operates. And so we did announce that we received a non-objection from the OCA to engage in crypto custody for ETP issuers, and that's I think a great first step. I think it's a great step for the industry. I think it's a good sign for those who want to partake in that kind of approach of prudent and methodical engagement around innovation with regulators and clients. And so we look forward to kind of seeing that to fruition, and we look forward to like engaging in other use cases that will open up the aperture to others.
Great. So while we continue to wait for additional exceptions or complete, overturn of SAB 121, Miles, do you think in the meantime, Puerto Rico, could become a hub for crypto banking, just because you guys are, under slightly different regulation?
Yeah, I think in a way that's a misnomer, just because the regulator. First of all, the regulatory environment in Puerto Rico is basically equal to the U.S. So our regulator commonly just references all of the U.S. guidance. They don't really have their own specific guidance. And so I think the difference, though, is that our regulator, when we came there in 2018 to get a license, we had a business plan that's the same business plan we have today. It talked about banking, it talked about digital asset custody, it talked about kind of all the components of our business, and they were willing to listen to it. I think had we taken that path, let's say in a state in the U.S., we might not be where we are today. So I think there was that openness to let us roll that business plan out, but it's taken us years. We're more than 4 years into it now. It took us almost 2 years to roll out our digital asset custody business, and we were being very cautious in each step. We even went to getting pre-audits before we roll out the product, which is unheard of for early stage companies. Is that normally you go run it in the market for a year and then the auditors come in and see if you're doing the right thing. And so I think Puerto Rico has the possibility, but I think the appetite of the local regulator is that they want to look and see how well we do. We've kind of been told that in between the lines is you have an opportunity to build something great here. Don't mess it up. Maybe if you do a good job, maybe others will come in. And that's the sense that we got. I mean, those are not exact words, but that's the sentiment that we got. And so I think it's a great jurisdiction for some of the flexibility that we get with regards to the business plan and the business model. But when it comes to the underlying regulatory requirements, we don't really have an advantage there. We're held to the same standards if we were based in any state or if we had a federal regulator in the U.S.
Great, awesome. And I will change the topic a little bit. Talking about stablecoin and real-world asset tokenization, what are your thoughts on that? Are you planning to do anything in that space? Any one of you?
I mean, I'll start. Listen, we've been, even before thinking about kind of having a digital asset custody offering, we've been engaged in the stablecoin space, just naturally providing traditional services to custody and manage reserves of stablecoin reserves. I think that became incredibly important, back to the point of resiliency, to have a proper, resilient, and well-known bank, be the custodian of those reserves. So, we think stablecoins have a place in the market. We think they offer the most realistic realization of the original use case of Bitcoin and crypto, which is efficient, low-cost payments. We also think that there is room for other projects, right? So, we recently announced that we're engaging in Project Agora, which is a collaboration with the BIS, central banks, and other commercial banks around deposit tokens. And I think that fits into the overall context of tokenization and tokenizing financial assets, which we're going to continue to see more and more projects around.
Yeah, I think the case of what's going to get tokenized first and what's going to grow the fastest, I think that obviously, I believe a stablecoin is a tokenized asset, it's a tokenized dollar. I do think that treasuries is probably the next really big growth space. People will be focusing on tokenized yield products. We recently entered agreements with BlackRock and Franklin Templeton to custody their tokenized money market funds. And so I think that you'll see that's probably the next area because it's easy for people to understand, right? It's moving into a tokenized dollar is essentially a non-yield bearing product. Now can we tokenize a yield bearing product? And I think we'll see a lot of growth in that before, the BlackRock's a good example. I think they've reached 500 billion or some silly number very fast. And I think we'll see continued growth of that. I'm not sure how fast we'll see like tokenized cars and tokenized houses and things like that, but it'll eventually happen, I think. When we can figure out how you manage title to those real world assets on chain, then you can tokenize the ownership of them.
Yeah, we're certainly working on all the above. I think in terms of stablecoins, a large amount of those are really serving as collateral for digital asset trading, and so yield on the stablecoin is really what needs to get addressed. And you would see that somewhere in that pathway is the development of digital deposits as a yield-bearing instrument. We're working on some projects like working with a partner, some friends from the CME here. We've got a small investment in some digital asset, Web3 trading rails. They're working on a proxy for segregated accounts. So that's a way to continue to earn interest on your existing fund. So projects along those lines to address that, I think, are important. And we are assisting a number of RWA projects, assisting as trustee for assets that are going to be real-world assets that are going to have a Delaware statutory trust, et cetera. So there's a lot of evolution there, but we're certainly trying to be a contributor.
Great, yeah. So last question, what are you guys most excited about in 2025?
Well, I'll take the first stab at it. We've spent the last 4 years or so building what I call infrastructure, banking infrastructure, this vision of what we call the banking of the future and what does it look like. So we've built this business which is TradFi and crypto and payments, and we're really looking now to enjoy scaling that, right? And so we're kind of I won't say we're exiting, but we're at a milestone where we have very good infrastructure. And scaling that and showing really the rest of the world that there is an appetite, not just in the very like crypto native or crypto-centric markets for these products, but that regular businesses have a need to, let's say, receive or send a stablecoin, or small to medium businesses want to have a little bit of treasury in Bitcoin. And so we're excited to start demonstrating how these two worlds can live together by not only supporting our crypto-centric customers, but supporting customers who are curious and giving them the tools in order to participate.
I think seeing regulators, policymakers, I know we've chatted a little bit about backstage about Maxine Waters and the stablecoin bill, start to embrace the future of what digital currency can unblock is really, really exciting. As I said, it's going to take a lot of patience from everyone in this room, everyone who's appeared at the conference, but I think finding those use cases and being able to actually do them in sort of a flight to quality manner where like that's respected and it's legitimized is really, really exciting. And so I think that, again, for a while it was, is it dangerous to be in the space? Now I think it's almost more dangerous not to be.
Definitely agree.
Certainly hopeful of peace and stabilization. I suppose that comment applies not to just digital assets, but I would also mention that while Eric and Miles have rightly cautioned that you don't want to go lightly into the space, there are advantages to building that infrastructure, because when we build real-time transaction monitoring to facilitate FedNow payments, that's something that can augment our risk management for the entire population of transactions within our organization. So as you build this infrastructure, it has collateral benefits to other TradFi applications that make that investment even more worthwhile.
Great.
I mean, I'll end. I love that comment, by the way. Peace. Like, I think that's a great thing to hope for in 25. More down to earth. I think it's all about. I think 2025 is going to be that year where you're actually going to see the bridging of TradFi and digital assets. You're actually going to see these use cases. You're already seeing it grow with like BlackRock Middle. You'll see it with other projects. And then I'm really excited about the ability for banks like us to start supporting the space in a way that they need to be supported, right? So 24/7, 365, on-ramps, off-ramps, ability to support settlement in that way. I think that is the goal, is to meet the industry where they are.
Great. Thank you, guys. That concludes our panel. Join me to give the panelists a round of applause. All right. Thank you.